All right, guys, welcome. We are here, Top Trades Live. Enrique, it's been a few weeks, 2 weeks, 3 weeks since I've seen you. You've been on the road.
Yeah, well, you know what? I mostly have been in Baltimore, I think, and the timing just didn't work
Yeah,
with the back and forth trips and everything. So it's funny. I've been far yet close. So
yeah, yeah, on the road and then here in the offices. It's been good. So the stock market has been pretty relentless. When we were talking earlier, I said, "What do you think about this melt up?" And you said it's not a melt up; it's a grind up. Tell us about that.
well, I mean, look, that's what's happening. Look at what the S&P's done. We had a week last week where we had 5 consecutive days where the S&P 500 was higher and it hit new highs. That has only happened, and I'm going to have on the Maverick tomorrow an exhibit that shows this about 15, 20 times in the last 100 years. But what's interesting is, believe it or not, when the market tends to do that, it doesn't tend to move a whole lot. So I don't even know that the market net, I could check it. Was it up even a percent last week? Like,
No,
the
we haven't had
S&P
we haven't had
500?
any 1% moves. Yeah,
Well, no, I'm saying for the whole week, was it up a
yeah.
percent? I don't think it was. And so, what we're seeing is the market is relentlessly higher. It's just not moving very much. So, it's a funny situation for traders because it's almost gets a little frustrating
Yeah.
because it's sort of like if you're a surfer and there's a bunch of waves coming in, but they're all small. They're very consistent. They're all small. You're like, yeah, I'm getting a little surfing done, but it ain't very exciting. Like it's not, these little tiny waves. So I think that yeah, it's more of a grind up, which probably grinds up shorts, to
Yeah.
on the margin. But maybe it's mildly frustrating for other people. I just want to throw out before we talk about anything else, the bespoke data. So it's actually since 1953, it's happened about 15 times. 50% of the time, the stock market is down the next week. That's where we are this week. Okay. 40% of the time, it's down in the next month. It usually we get a little bit of a breather comes after one of these little grind ups. So that's kind of what we're waiting for and have been positioned for.
I mean, it feels like it's time. I mean, everything has been, just straight up. And these baskets of theme stocks, these tech baskets have just been outrageous. And even the bigger ones, you look at like the crypto related stocks, your Robinhoods, your Coinbases, and all that. I mean, some relentless uptrends in those. And then over the past week or so, maybe a little longer than that,
Exactly.
those have started to correct a little bit, stop going up. You look at the quantums, the AIs, the flying cars.
Last Wednesday we saw a rotation that you saw in what they like to call the value names. I call them the losers. Because usually anymore, and that's not that value always loses, but
Right.
anymore you get put in a value index because your stock's not doing very well.
Mm-hmm.
So you saw a rotation, and basically all the stuff that was popping off last Monday, Tuesday, Wednesday has basically done nothing or gone down. It might even be down 5, 10, 15%.
Yeah.
You had the open day, which was Monday, and then you had Dork Day, which was Tuesday. For those of you who don't know, Dork stands for the tickers of Krispy Kreme, Donut, uh, Open Door, Rocket, and I don't know. I forget which. I'm going to get them wrong. Whatever. Um, the That kind of popped off Tuesday, but since then they've all done nothing. So
Yeah.
I think we can see a nice correction coming. And one of the other things, and this is literally what's happening right now, we got a Japan trade deal and a European trade deal, and the market's not doing anything,
Yeah.
and this gets to one of the big things I talk about all the time is if you tell me what a piece of data is going to be, I love it for individual stocks. This is so true. You tell me that company is going to crush numbers. You say, what's the stock going to do? I'll say, well, what's the stock chart look like going into the number? If a stock like Nvidia right now, I've been on record with this. If Nvidia were to report right now, I don't care what Nvidia reports, it's going to be down. because it's that overbought. I don't care if they beat the number by 10%, it'll be down. And so to a certain extent, the overall stock market's like that I don't really know. There's no real good news that can move. There's nothing going to be good enough to really move it. So I think we just have to go through this, at best, it'll be a sideways consolidation. I mean, let me just take a look here. I don't know if you want to pull the charts up, but the S&P 500, let's see what it looks like here. Yeah, I mean, the S&P 500 is the 50-day moving average, if you pull that up, is at 6114, and we're at 6385. Those two lines need to begin to consolidate. And look at what happened back in December, November, or better yet, also good. Take this out a little bit further. Take this out to, there we go. Get that July in there. Okay, that's what we saw. So I don't know whether we're going to see that move or see what we saw happen after the election. But one of those two moves is happening. It's not a probability, it's a certainty.
Yes.
What does that mean? It means what we said before. You just take your profits, your extended profits, you have them, and have some dry powder. One other thing I'll add here, we are seeing, and we're seeing this in the macro, we're seeing a ton of great earnings setups. This is just setting up to be a classic, like, company blows away the numbers and, the stock gets hit despite the fact that they raised all the guidance. You get a chance to step in and buy it. So, things are kind of going the way they should, I guess is what I'd say.
Yeah, absolutely. And, you mentioned the whole meme stock thing, the brief, I guess, I don't know if you want to call it like a little bubble or fizzle about those meme stocks that were popping off last week. I've been feeling cautious for the past few weeks anyway, just because it feels like the market keeps on getting more overextended. But when that started happening, my radar was up. I was like, okay, this is not usually what happens like at the bottom of a trend here when you have, like these message board stocks popping, double digits a day and then just, falling apart. So it feels to me that that's very late. I don't want to say cycle, but, late in a rally, that sort of action tends to happen. And then that combined with the fact that the other tech basket stocks just weren't working anymore, it makes me think that like we're going to be in a situation where we're going to have a lot of people trying to buy the dip in the Quantums, the Jobies, and all these other stocks that had treated people so well. And they're just going to get set up for failure over the next few weeks as those, give back a lot of their gains.
You know what? I went on a walk before because I didn't have enough time to do workouts. So now I've started walking, especially when it's hot. Like it's like you get an extra little workout. And I was thinking about this grind up, how the market's just moving higher and higher. And I then thought, remember back in April when the market was going down, and it just went down every day. It just was relentless. And we were sitting here and saying, hey, this is gonna stop and it's gonna recover. I didn't have it doing a V, but I knew it was going to recover. There was no doubt about it. It was a certainty, but it was easy to dismiss us or dismiss that opinion because for the past 15, 20 days, it had done nothing but go down. So no, that's never going to happen. That's where we are on the other side. Like you look at that chart since June, you have 2 months. It just relentlessly ground or grinded higher. I don't know what you do when it ground higher doesn't sound right, but it's relentlessly, gone higher and it's going to correct. So I just say, be nimble, stay, take your profits, and just be ready for the correction. I mean, those of you who follow me on Twitter, I have this account I call the tactical trading account. It's just my IRA and I just do stupid stuff in it. Like very well thought out stuff, but very large risks. Like do not do this at home kind of thing. I've been buying SQQQ, which is the 3 times inverse NASDAQ, but I'm not just buying it as a hedge because it'll go up when the market goes down. But I just feel we've pushed out onto the certainty curve on a pullback so far that it's like it's 100% that we're going to pull back to the 50-day moving average. And you don't ever do that politely. It never feels good. Like it is 100% it's going to happen. And you know what's not going to happen? I'll tell you what's not going to happen. That we're going to go up 0.1% per day for the next 30 days and the 50-day moving average catches up with us.
Yeah.
That's not what happens. Okay. at some point it gets freaky. And and I'm long freak right now. Like, the VIX is go back down below 15, whatever it is. Yeah, like I think I just be cautious, be prepared is my view.
I mean, it's going to take a 5% drop just to get down to that 50-day from here. And I would think that we would, if we're going to go down like that, we're probably going to undercut, shake some more people out. I mean, it's almost August too. And on top of that, we have like probably the biggest news dump week, that we've had in the foreseeable future. We have the Fed, we have all of these earnings. I think, what is it? Thursday is the big day where we have, what is it? Apple, Amazon, Coinbase. Who else is reporting this week? Oh, Wednesday.
Microsoft, I think. Microsoft tomorrow.
Wednesday, yeah.
Yeah. So. I mean, and you know what though? You know what I think could happen? I think it's going to go trade deal on us with these earnings. What do I mean by that? Again, had I told you that we have, and we can quibble about what are the details of the Japan deal and what are the details about the European deal? All I can tell you is we're not going at each other's throats anymore, right? And that's a big positive. Like, something's going to be settled there. But if I would have told you that those deals were going to be announced in 1 week, you would have said the market was going to be up 3-5% the following week. And it's not doing anything. Why? Right. Because it's extremely overbought. And, pull up the chart of Microsoft. This is where we're getting. I think we're going to see very strong earnings out of these companies. I said that going into this. I said that in April, that we were going to see really good earnings coming out of these companies. Yeah. But I think there's just going to be, it won't be enough. And, the funny thing is in momentum markets, I talk about this when I talk about momentum stocks. Momentum stocks are either going up or they are going down. They do not go sideways. The reason something is a momentum stock, and by the way, Microsoft is a momentum stock right now. That's a momentum stock chart. The reason something is a momentum stock is because people are buying it because it's going up. So when it stops it's going up. Do you know what those people do? Well, number one, they stop buying. But number two, they don't just sit there because they weren't buying Microsoft because it's a good business. They were buying Microsoft because it was going up. So if it ain't going up, they're going to sell. Yeah. And then what happens? It goes down. And then what happens to more momentum investors, the next people on the curve? Well, they go, well, darn, not only is it not going up, but now it's going down. And this is why momentum markets and momentum stocks never correct sideways. They always, always, always will correct with some degree of violence or, disruption. Now, does that mean Microsoft? But let's go back to what you were saying about the S&P 500. And we talk about this a lot. The distance on Microsoft to the 50-day moving average, 512, I don't know, it's 7%. Yeah. So how much downside do I think there is to the S&P? 3 to 5%, easily. Oh,
yeah, easy.
Like in a nanosecond. And again, we talked about this. Maybe we sound like a broken record because I guess we told people to sell Robinhood at 100 or whatever. I don't know. But where is Robinhood? I don't even know. Is it? Pull up Hood for a second. But when I say to you that you could sell off by 10% and still be in a beautiful chart, that's a danger zone. Yeah. Like that's not a comfortable place to be. And that's where Robinhood is. I mean, Robinhood's a perfect example. You got 20 points on Robinhood. You have 20% downside and you'd still be at the 50-day moving average.
Yes.
Number one, awesome. Number two, whoa. I wouldn't. And I'll share one other thing. So can I go down a little rabbit hole with blackjack for a second? Because I think this will be useful to people. Okay, so my dad was. We published this first part in Truth and Trends. My dad was a professional gambler. All he really did was play Keno and some other stuff, and it was just a way to slowly lose his money and keep him entertained. But because he was a professional gambler, he lived in Reno. My parents met in Reno, but he lived in Reno and Las Vegas for 40 years. So when I used to go visit him, I was around these casinos all the time. So I got into blackjack. And, I always liked blackjack. It's the closest odds. You can figure out the rules and all this. But what was actually just as important to how you played blackjack is your money management. And in gambling, what that means is what you do when you go up to the table. So I would do the following. I'd walk in and I'd say, I want to play for 2 hours. I'm going to take out $3,000. And I'm willing to, once I take the money out, I'm willing to lose it. I'm out. Like if I lose $3,000, I'm out. And I'll just go, go for a run, go to a movie, whatever. But then when I went to the tables, what I would do is if I doubled my money, I would basically take out 60% or 2/3 and then use the last 1/3 to get to my time. If I got to my time and had not lost all my money, I would always just walk away. Okay. And so I basically set these entry and exits. The same thing is true of stocks, right? So I think let's go pull up Open. Okay. I traded this one just personally. It was moving way too quick to be, we couldn't even recommend it. It was moving so fast. But I basically went in, and this is at the stock at like 65 cents or 75 cents. Right. Somewhere around there, and said, okay, I'm going to put up, I don't know what I put in, $2,000, $3,000. And then I said to myself, if I double my money, I'm going to take 60% out and then let the rest ride. And if I lose all the money, I lose all the money. Okay, that was fine. And basically what happened is I doubled my money in 3 days and I took the 60% out. And now I'm happy to let the rest ride. And to be honest, I don't know, Open's probably going to $1 before it goes higher, but it could catch a wave and go to 5 or 10. But now I'm sitting on a 20% gain on my original capital. So I basically have $2,400 in the account from my 2,000. And then now I had $1,600 worth of stock, and now it's probably $800 worth of stock from where I sold. But I'm still in the game. I still have upside, but I pulled it out. This is the kind of this is the kind of skill, kind of money management you need to be able to participate in speculative markets and maintain your discipline to come out of them with two goals. Number one, make an awesome amount of money, but number two, keep a very nice amount of money at minimum after you've made an awesome amount of money.
Well, and prevent yourself from making those poor snap decisions based upon whatever the day's price action happens to be too. You're protecting yourself because you remove that emotional baggage from the trade once you've collected that double, right? And then therefore you don't really care that much that it's down.
Exactly.
Whether it's down today.
You are unmired. You're disconnected from price. Okay.
Yeah.
You should always be disconnected from price, right? Because it's a sunk cost. But there in particular, you're just like, it's a free bet, it's the same way. I mean, I use the blackjack example. I mean, I would do the same things if I'm sports betting, right? Is I'd make my strategic bets. If I win enough, I bank all my money plus 20%, and then I just go take flyers and have fun. And, and maybe I get lucky or something like that. I know that sounds, I don't want to say undisciplined or not frivolous, but it's not. It's actually an intelligent way to take speculative risks in a thoughtful, disciplined manner.
Right. Well, going back to what you were saying about blackjack, because you're entering or you're going to the table with a plan in that situation, then there's less likely a chance of you talking yourself into taking more risk when you shouldn't, or whatever the case might be. If you set these hard limits on yourself and then you go there and in a half hour you're busted and you're like, well, you can start talking to yourself and say, well, I have 90 minutes left. I could go get another $3,000 and just see what happens. Nothing could hurt, And I think you're leaving the door open to bad decision making if you don't go in there with the initial plan like you're doing.
Here is beginning trading 101. Okay, the most important thing you'll probably ever hear me talk about starting as a trader. So many traders get in, they start with $2,000. They quickly get some big wins, go to 3,000, 4,000, 5,000, decide they've got it figured out, and then go and say, well, I'm going to pull 20,000 over from my other account and end up at zero.
Mm-hmm.
That's the pattern. And in bull markets, what's to me even a worse pattern, okay, that's pretty bad what I just went through, is people start with 10,000 and turn it into 50, and they walk out the other side of the bull market with zero. Okay, we're trying to this portion of the bull market where we are right now is about 1/7 of the time, one of every 7 years, maybe one of every 5, where you have the opportunity to find things like open that can go from $1 to 5 in 5 days, 10 days. This happens. This happened before. It happened in 20. I've seen it happen for years. I mean, it's changing a little bit, but it just evolves. Like there's always been this. It's 1 out of 5 years. Your key, and I've been talking about this a lot recently, is to take your $100, try to turn it into 500 or 1,000 during these periods, but make sure that you're using money management skills so that when this period is over, you're still sitting on 300 or 400. Because the worst thing in the world is you go, oh, I made, I took my 100 to 1,000 and I ended up with 0. That's a much bigger mistake than anything else you can do. So that selling discipline is absolutely key. It's about the entry and the exits. And look what I do with the blackjack. I know what I'm going to do before I go to the table. And then what do? I plan the trade. I trade the plan. I stick with the discipline that I was going to have. And going to the blackjack table is just like trading, trading speculative stocks.
Yeah.
So someone said, Donna Prudhomme asked, what if you don't double your money quickly? How long will you hang in a stagnant position? That's actually a good question. Yeah. What I would say is that a lot depends on what's the type of trade that you're going into. For a lot of these speculative, so it's funny with what Greg does, because they're options, you're going to be in there for 6 weeks, right? 10 weeks. It's by definition, how long you're going to be in the trade. But I feel like if you're doing a lot of these kinds of speculative trades, these breakouts, it's either going to pop within 3 days of when you get in or 3 weeks. And if not, it's not going to pop at all. Yeah. Would you agree with that, Greg? My girlfriend and I have been having a lot of conversations about this. Is that roughly the timing that you think?
Yeah, I think so. That's fair.
Fine. Yeah. So I think for these kinds of trades, if you get past 3 weeks, probably just move. If you still have all your money, probably just move on and find the next one.
Yeah. Yeah. And especially and I've been talking about this a lot in chat, when we're in a market like this that has been ripping higher and, before the tech themes really started correcting last week, if I'm getting into something that looks like it's going to break out and it doesn't go down, but it really doesn't go up and it stays stuck in a range, then I'm going to be less patient with it because there's no reason to hang on to something moving sideways in a market where everything else is moving straight up. You might as well
also true.
Might as well just move on to other stuff that might be breaking out. We're not getting married to these positions. We're dating them, and if the chemistry is not there, then well, we'll jump back into the dating pool, and that's how it goes with these stocks.
Well, and if we take the other side, take another piece of this, take what you just said, fitting into what I was saying, if these markets only happen once every 5 years, 10, 15, 20% of the time, the opportunity cost is huge. To own stuff that has the opportunity to go up 10% when you're in a market where a lot of stuff is going up 100% quickly, you have to evolve your styles there's consistency. All my trading and my investing have certain consistent, the 10 commandments, so to speak.
Yeah.
But then I've got tools where I'm doing, I'll use a better example I like is you're running a restaurant making seasonal food. Maybe it's an Italian restaurant, so it's always doing Italian, but in fall, you're going to do different stuff than you do in winter, than you do in summer, based on the produce that's available. That's what the market is. You've got the same rules over and over, yeah. But you need to be able to pivot. And so, yeah, I think the opportunity cost in this market is massive.
Yeah, absolutely. But I also think too, like you were saying, I think my menu is going to be changing over the next month. Obviously, I'm not going to be slinging the opens or the Qs, the quantums, or any of that stuff. I think those are going to probably retreat pretty sharply, and we're going to be into other names. We're probably going to have to expand our time frame a little bit, longer swings as opposed to these very quick hits. But we'll see what the market does.
Well, the funny thing is the market's actually moving from your style to my style.
Yeah, that's what I was going to say.
So it's you and I are perfect complements to each other because we're getting, we just launched version 2.0 of Signal Trader Pro. We launched this a year ago, last July, and it did really, really, really awesome. But we're not happy. We wanted. Now we got a year of data running the system. And we basically went in and made a couple changes. And this doesn't really impact what I'm about to say. But we have seen just in the last, I don't know, 10 days, we're starting to see signals pop off. A big part of that is earnings, because we get a lot of earnings-based signals. And that's the thing about the Maverick, is we love earnings season. We either get paid, we just closed out 2 earnings things that on last in the last week, or we get the next quarter's opportunities. But what this is doing is it's presenting a lot of sort of mean reversion. Find companies that are doing awesome. They report an awesome number, but they still traded down because someone took umbrage because the stock was super overbought, buying that, sitting on it for a month or two. So we're moving from your strategy to my strategy right now.
Yeah, even before I got on the call, I was like, Enrique must be salivating with all these earnings coming up and all the stocks in the stratosphere here. He's going to get some resets he's going to be able to buy.
we are getting, I'm just looking at the list right now. We're getting some really high quality companies, like things that I just wouldn't expect that I would get, are popping off. For those that we talk about the system, we use a 15-point scoring system. 14 and 15 are just like the best of the best, crushing numbers, stocks going the right way. And I have had, in the last week, last 2 weeks, we've had probably 8 14s or 15s show signals. I mean, I don't know, in the month of December, I don't know that I had a single 14 or 15 show a positive signal. So but this happens during earnings season. Part of that's earnings season. It's sure. Definitely a good spot for it.
Yeah. Well, getting back to some of the noise that we're dealing with this week, we have Powell tomorrow, and we're not going to get a cut. At least I highly, highly doubt we're going to get a cut right here.
By the way, that would take the market up. And I don't know what the odds are. I think that it might be 5-10%. I could actually see us getting a cut. Like just him just being like, fuck, screw this. I'm like, just here's your cut. Leave me alone. Did you see that video of him with them in the hard hats?
With the hard hats, it's so funny.
I was watching it live and it was so cringe. I literally so when I watch horror movies, when it gets really gross or whatever, I mute the television because for some reason it doesn't bother me as much to have the horror movie muted. I literally took it, I muted it. I was like, I can't listen. I just can't listen. And the look on his face was just like,
yeah.
I went on Twitter and I posted I'll give a free hat to the person who tells me what's going through Jerome Powell's mind right now. Yeah. But my point is, I think it's a not zero possibility that he just goes ahead and does the cut just to be like, leave me alone, okay? I want to move on. So
that would be really funny. But yeah, I think the market's expecting him to at least sound a little bit more dovish about a cut in September, maybe 2 in the fall. I think that's what folks are kind of waiting to hear from him. I don't know if that's going to be the big mover though this week. I think it's going to be more Mag 7 earnings and the August 1st trade deadline. It feels like Trump is getting what he wants here from the deal with Europe. It seems like he steamrolled him and he got at least most of what he was looking for out of that. And like you said, the market reaction was fairly muted to what I would assume would be a pretty big deal, since I could have sworn we were freaking out about trade for 2 months back in the spring, and now we're getting it resolved and nobody seems to care because the market's gone up so much. Do you think that potentially August 1st, like the trade deadline, all this stuff shaking out, even if it's very favorable, you think it's going to be a sell the news type event, a nothing burger? Or
look, narrative follows price, not the other way around. So, price, because we're so overbought, is setting up for a correction and consolidation. It's just math and physics. I'm sure there's going to be any number of narratives. Oh, August 1st was a problem. Oh, earnings beat, but it wasn't enough. Oh, NVIDIA said whatever. I don't know. I don't know. Don't care. I just know what's going to happen because of price. And so, that's once you understand, and I know you do, but many of our people on this call do too. Once you are able to divorce those two, and what I'll say is this: one time out of 10, narrative is actually driving price.
Mm-hmm.
And intermediate long-term narrative drives price. But in a 6-week period, in a 6-day period, it's generally more price action. So, but we're starting to see it even today. One thing I will say about the Trump thing, you and I were talking about this. I think his current administration is lining up very similar to the previous one, which is my view on the previous one is he would go out and have a goal, many goals that I would generally agree with. He'd go out and go big, crazy big, where you're like, I want you to do that, but you're not going to get that done. And the other side would be like, oh, if you do that, it's the end of history for mankind as we know it, the world's over. And then about 2, 3, 4 months later, he'd get 20% of what he said done, which is 20% better than where we were. And then it kind of just moved on to the next one. That's what these trade deals are doing. So it's the art of the deal. Like it's actually working. He's doing it. And what I will be fascinated, and I'm humble enough to know I don't know. So far, we have seen tariffs going up. The money's in the Treasury. Those are facts, mathematical facts. And so far, inflation hasn't really picked up. It's picked up a smidge.
Yeah.
I just don't know in the next 6 months. The Trump folks have a theory that it won't pick up very much. The mainstream has a theory that it'll pick up a lot. We know tariffs are up, by the way. We can look at the money in the Treasury. You can pull it up, I think, daily off the Treasury website. That'll be kind of the make or break to me of whether the market is down, flat, or up 6 to 12 months from now. I very strongly lean flat to up.
Mm-hmm.
And if the Trump administration is right, and I think they could be, because the thing about this trade thing, there's so much there's so much certainty on the mainstream side that free trade, if you mess with it, it's the end of civilization. But no one's ever really messed with it in 100 years. Yeah. So I'm just like, it's like telling me that this is the way something works, but we haven't really tested it in anything that looks like our current world. Now we're giving it a solid test. If the Trump administration is right, 8,000 on the S&P. I mean, we're going 25% higher, in my opinion. But right now, it will be interesting. I'll tell you what's going to be here. I'll flag what I think could be the thing that gets the correction. I would actually watch the inflation numbers the next 2 months. That, to me, I'm not so worried about the jobs numbers, but I think the inflation numbers could be the narrative that leads to the price potential realization.
Yeah, that makes a lot of sense. I mean, the wounds from the inflation in 2022 are still pretty raw, and I feel like if we get another round of that, then it's going to be more fodder of folks saying, okay, this tariff situation is a total mess, and it's going to kill us. We're not going to get lower rates. Everything's going to fall apart. I think that's going to be the narrative if that does indeed happen.
Well, but I actually don't think that would be the narrative that will hurt this. I don't think we need lower rates to have the market go higher. I think an argument can be made. I think that if inflation picks up, you might actually switch to a risk that they're saying, I know this could sound crazy, higher rates, then we're really going to be at a loggerheads. Yeah. Where if we saw, that's the one thing. So the one thing that keeps me, the one narrative that keeps me up at night, that I'm really concerned about, and it's too early to tell, is we know tariffs are up $27 billion in June. Okay. Mm-hmm. That's a mathematical fact. The question is going to be, where does that number go in July, August, September, October? I think it goes higher. And then the question is that number coming out of U.S. corporate, foreigns, or is it now going into pricing? The answer is going to be all three. It just depends how much. We won't know that. We'll get more visibility in that till August, September, October, which, by the way, is when the market usually begins to consolidate anyways, or seasonals become very difficult. So that is the one thing to watch. But there's nothing to be done about it right now. Like I literally can't. I'm just focused on price because I can't. There's no way to game that. other than, just to look at the weekly data and all that. But if not, it's one of the two things that's going to happen, and we're going to find out.
Yeah. Yeah. So last time we talked, both you and I agreed that Hood, Coin, Circle, all that stuff was way overextended, and you should be taking profits on those names. Still think that's the case. And you also mentioned, though, and this was a few weeks ago, you said that you should take money from those ideas and go heavy into Ethereum and Bitcoin, and that has really worked out well. Ethereum especially has been a big mover. And I think last time we were talking, it was just starting to break out here, if I'm not mistaken. Where do you see us in this cycle with Ethereum now that it's kind of consolidating here? Do you think it's going to reverse, or do you think this is just a pause before we see like 4,000, 4,500 getting back up to those 2021 highs?
Well, look, I thought it could go back up to 3,500, 4,000, and it did.
Yeah.
I get back to what I've said before. I'd take the majority of the trade off and just to let a little bit ride. I'd be a big buyer, slightly lower, closer to the 50-day moving average. But it's almost like I feel sort of boring sometimes because you show me the same chart. It's totally different stocks and totally different assets. And for the most part, right now, I'm just giving you the same answer. Some people might call that boring. I call it disciplined. There will be times where I would not put that answer out. I don't know that this is one of them, though, with Ethereum. What I am interested in is take a look at Solana.
Yep.
So, and just so you know, like, I'm not interested in, I'm probably interested in 3 or 4 area coins. Bitcoin is digital gold. That's all it is. It has nothing. Bitcoin has nothing to do with blockchain technology at this point, in my opinion. Okay. But if Ethereum, Solana, there's sort of the trading dynamics. I know I'm right. Okay, yeah. That part we could get into a whole esoteric crypto blah 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 conversation. Trading dynamics. I know I'm right. Ethereum, Solana, and XRP all have uses and have like technologies they're used in. My view was Ethereum was the driver of stable coins. It was lagging Bitcoin. Therefore, it would rally. It just did that. Solana sits as the next one in the stack that I say to myself, here's something that actually has technology where blockchain technology that's being used. And look at this. This is at 180 and it peaked out at 250, 300 in January. So here's what I do. So last time we said, sell your hood and buy Ethereum. That worked out pretty well. Not because hood went down, but Ethereum went up. I'm going to say sell your Ethereum and buy your Solana.
Okay.
I think that's a good trade. I think there's a futures ETF, right? What's the?
I don't know. I don't know Solana ETF.
There's Solz, SOLZ, if people want to buy it as a stock. And there's SOLT, which is the 2 times leveraged.
Oh, okay.
Solz is pretty new, I think.
Got it.
And what I didn't even say, what I didn't even mention. By the way, this idea came from my girlfriend, so who's come up with a lot of really good ideas recently. They're talking about the SEC approving. I think there's a deadline in October for a Solana ETF to actually hold Solana, which is the same thing that happened for Bitcoin that acted as a huge catalyst. And the thought process is that most likely it's going to happen before October if they end up doing that. Yeah, SLON is actually the more liquid of the ETFs. Thank you. Yeah. So SLON and Solz are the 2 futures ETFs. And then Solz. But so I like the Solana trade. So there you go. I actually have a trade. So I guess I said to people that I like SQQQ because I said I'm buying it myself. And if I had to rotate out of, big winners and into something, I would rotate into Solana because I think that's it's the same trade we did with Ethereum. It's literally the same trade.
Yeah. It's funny. One when I was on Top Trades with Chris Cimarelli, we were talking about Solana. He likes Solana too. He's more heavily
Right.
involved in crypto than I am, obviously. And I was talking about how much I like this failed breakdown here, this final shakeout before it really started going again. And I really like it here at this 180 level. We get a green candle off of these pivot highs from mid-May. It could go again. I really like this. This is a great idea.
So yeah, but this is what you should do in this kind of market, right? I'll give you a simple rule in a late stage bull market. Take speculative assets. What do I consider speculative assets? I don't know, assets that have moved a lot, assets that, don't have big dividends. I mean, basically anything in crypto. And buy them when they are upwards trending, but not overbought, meaning reasonably close to the 50, 100, 200-day moving average, especially the 50-day moving average. Sell them when they're super extended from the 50-day moving average. I would almost put together a list of these speculative assets and take all the ones that look like Ethereum and swap them out to go buy Solana. One last trade here, that I'll put in there. I mean, we got time. I'm interested in gold now, more than probably the most interested I've been in gold in months.
Gold, is that a crypto coin? What is gold?
Yeah, exactly. It's physical crypto.
Oh, and I have it in
this is physical Bitcoin. If you guys aren't familiar with gold,
man,
so
weird tickers.
Yeah, I don't know. Try XAU.
XAU.
There you go. That's the gold. That's the ETF, I think. XAU is the commodities ticker.
I'm cheating.
You just do GLD. That's fine. Yeah. So I love this chart. That's beautiful. That's gorgeous.
Yeah,
Load up on that. Actually, I'll tell you what portfolio I love? 1/3 SQQ, 1/3 GLD, and 1/3 Solana. I love that. That is a thing of beauty. But you understand what I'm doing there, right?
Yeah.
We got if stuff stays crazy,
yeah,
the Solana is going to do a lot more than the triple Qs, negative triple Qs. Gold probably does nothing. If we roll over, Solana is going to roll over, but gold will lift and SQQQ will kick in a big way. I think that's a very clever portfolio structure.
No, I like it a lot. I mean, one of the things I've been thinking about too is if we do see a bigger pullback in the stock market, like let's say we pretty quickly go back and we revisit the 50-day on the S&P in a matter of a week or a little more, and folks start to get spooked. Are we going to see selling in crypto, or is crypto going to be more or less immune to it? I have to think that if the market goes down sharply, maybe not that far, but sharply, we're going to see some bumps in crypto as well, because it's kind of the same.
Well, I agree, but it's not like this rally wasn't, this most recent speculative fervor was not led by crypto. It was led by meme stocks. Yeah. And, that's the funny thing is before that term dork came up, I was joking about, I was like, oh, meme stocks are the new shit coins. Excuse my language. No. But that's exactly what they were doing. It's actually, we were having a conversation in the house and she was saying, oh, I'm going to buy some of these coins. I'm like, why? When you can just buy the stocks, they're acting the same way. And so I don't know. I'm not as bearish. I'm not as concerned about, this pull up Bitcoin as an example. This is another example. Bitcoin's just, hovering not too far from its 50-day moving average.
Yeah.
So that's what, and I feel like the market, and maybe this is, when I say the market is basically reflecting what I'm saying, what I'm actually saying is something different. I'm saying I'm reflecting what the market's doing. I don't know that the market for the speculative money that's moving things on the margin is really differentiating between NVIDIA and Robinhood and Palantir and cryptos and meme stocks. It's not really thinking of them as asset groups. It's almost looking at them as charts. I feel this rotation happening. So, what you can do is you take each of those groups, which is where everyone's playing. Those are the basketball courts where everyone's going to go shoot hoops. And you just take the ones that are extended. So I would add Bitcoin to the list. I would buy, I'd sell the hoods and the NVIDIAs and the S&Ps, and I'd buy Bitcoin here. It's a beautiful, great chart. It's moving, it's right nicely with the 50-move average, but it's not too extended. Yeah. And, you can just do these rotations. And, the beauty of these rotations, again, what I like about these rotations, the Hood Ethereum one worked out great, but it worked out mostly because Ethereum doubled, tripled. Okay. Yeah. That's one way to win. Hood also could have just gone back to the 50-day moving average and you lose 25% if you held onto the Hood. And Ethereum, which at that point hadn't moved. I mean, let's take Hood Bitcoin right now. Hood's 20% down. And I did say this the other day. You can't have either Bitcoin has to go higher or Hood has to come to its 50-day moving average.
Yeah.
There is no world where Bitcoin stays near its 50-day moving average and Hood stays extended from its 50-day moving average. To me, it's more likely that the Hood comes down. But look, what are we? So that's 1170 versus 1110. So you're about 4%, 5% from the moving averages on Bitcoin. So that's another trade I like. I would say gold and Bitcoin, look very attractive to me.
And just as a visualization of how strong Hood has been, it has to drop almost 20% just to tag that 50-day moving average. So
it's unreal. And if it doesn't, and you want to know when it's going to do that, here, I'm going to tell you. I'm going to tell you when Hood's going to trade off bid. I'm going to give you the date.
Yeah, I got to write this down so I can be sure.
July. Oh, maybe it's tomorrow. July 30th. There we go. Hood's going to be down 10% tomorrow.
10% drop on earnings.
10% drop. 5 to 10. 5 to 10. 5 to 10% drop. Hood reports tomorrow. Stock's going to be down 5 to 10%. High probability bet. 70-80% bet. I don't care what they report. There's nothing they can report, in my opinion. We'll see, guys. I'm really laying it on the line here. By the way, this is a call that's literally happening tomorrow. But I don't see what they can report that's not going to disappoint people. And when I say that, you're like, well, what do you mean? Like what are expectations? Well, I'll tell you, how I measure expectations? This is how I measure expectations. The stock is up 5-fold in 8 months, and the stock is up 4-fold in 3 months. So when you're thinking about expectations, people make a mistake. They go in and they say, well, they're supposed to earn 31 cents, but the whisper number's 45 cents. That's all garbage.
Right.
Okay. In this situation.
Yeah.
What the expectations are is the stock's up 400% in the last 3 months. So I'm going to tell you something. Unless Hood, I'm going to the tape here. I'm actually looking at the beats on Hood. Okay. So here they reported 11% beat. So they reported $1.01 in February versus 43 cents, and that got the stock up 14%. But I'm going to tell you, with the stock up as much as it is, that was on February 12th. I bet you they're supposed to report 31 cents. If they report anything less than 75 cents, which is 100% more than the 31 cents, I think the stock's down 5 to 10%.
Yeah, that's fair.
Now, again, I'm playing probabilities here, right? I'm saying this 89, my view is 80-90%. I think it's worth. I mean, I don't know if they go out and short Hood. I mean, I'm not going to, because I have a recommendation, long-term recommendation on Hood in another publication, so I wouldn't do that. But as a trade, but my point wasn't about going to go out and short Hood. My point is about what's going to correct the market and what's going to correct these winners. And so if I owned Hood, I would sell Hood and buy Bitcoin. Because I'll tell you what, if Hood reports great numbers tomorrow and goes to new highs, that ain't bad for Bitcoin and Solana.
True. Yeah.
And you know what? If Hood reports great numbers and sells off 15% tomorrow, that ain't bad for Bitcoin and Solana.
Yeah.
So I like that rotation.
Yeah, I like that a lot. Sticking with just earnings ideas, out of, what is it, the 4 biggies that are reporting this week? What is it? Microsoft, Meta tomorrow, and Amazon, Apple on Thursday. Which one are you most looking forward to? And do you have any big predictions on those, just for fun?
So it's Microsoft, Apple, Meta,
Amazon.
Amazon.
Hmm.
Uh, no, I mean the ones I probably had the biggest views on were Tesla and Google. To be honest,
Oh yeah, that's
I
fair.
thought I thought I thought Google was going to blow away the number, and I thought Tesla was going to be crap. Look, I think Microsoft will be. Look, Microsoft has a mixed history on these reports. Like when I pull up the reports, they're the ones that do sometimes get a little messy. So in October 30th report, the stock traded down 6%. January 29th report, the stock traded down 6%. There was a little noise in it. The next report, it traded up 7%, but that was coming off the sell-off. So
Yeah.
Microsoft, look, I'm data oriented, man. Like, Microsoft would be the one that would concern me the most. Amazon also has a little bit of a history of that. Last 2 quarters, it's traded down, even despite big beats.
Mm-hmm.
Meta's probably the best fundamentals, but it's also up the most. But I think Apple's probably the one with the biggest upside because just expectations are so low.
Right.
So what are my favorites out of these? Well, probably Apple and is my favorite, with Microsoft my least favorite. But again, a big part of that is just Microsoft's like this, man. And they've reported some messy little quarters, and Apple's not Where are expectations? And expectations are 2 things. The best measure of expectations are price. Hood expectations are through the roof. Microsoft expectations are through the roof. Apple expectations, not so much. The second best measure is what the companies have reported recently. These are data-based measures of expectations. Mm-hmm. And, I think Apple's been just fine. They've gotten plenty of nice little beats. So I like Apple just like Microsoft. Meta and Amazon are probably a push.
Yeah. Well, you mentioned Tesla, and I mean, the numbers were objectively bad, and yet the stock is just sort of hanging out, which is pretty impressive, actually.
Well, we're going to come up on time here. I will say, I'm going to set this out in truth or trends note. And I know similar calls like this have been made over and over and over. So I'm wary of that. Yeah. But I think Tesla's at a really pivotal moment. And what that moment is, the car business is sucking. Yeah. It just sucks. He's not well positioned. The numbers stink. They're not getting better. I don't really understand what will make them better. Robotaxi's fine, but it ain't going to help the numbers anytime soon. And it's going to lose him money before it makes him. And, he did $100 million in cash flow this quarter because all those things are going away. I think Elon Musk is going to be in a cash crunch as soon as the second half of this year. And I think that he needs to address it at Tesla, at Tesla.
Yes.
So I think he needs to do one of 2 things, and I think he should do both. No matter what, I think he needs to raise money, and I think he should do it with equity. I would go out. Tesla's got $1 trillion market cap. I'd go out and issue $100 billion worth of stock. The market could take it because of the options markets, et cetera. And then he's got $100 billion in the bank, which he's going to need. But I would do one better. I would go out and I would buy XAI, which is the old Twitter plus his AI business, for $200 or even $300 billion. So for 20 to 30% of Tesla. It will take his ownership in Tesla up, which has been a big thing with him. And then after you do that transaction, I would go in and do my transaction. And then you've got the pure play AI company that owns Tesla and the robots and X and AI, et cetera, with $100 billion on the balance sheet. And it's the pure play. It's better play than NVIDIA in many ways, right? Okay. Because it's got... So, I mean, that's bold as, the kids say AF. I won't say the full word, but I think this is what he needs to do because I'll go the other side. I feel like if he doesn't raise money, he's gonna be in a position where I think the stock gets cut in half, if not more. Yeah. He's got 36. I'm just looking here real quick. He does have 36 billion of cash on the Tesla balance sheet. But cash flow from operations, okay, so it's not that terrible. He still did $2 billion of cash flow from operating activities. But okay, here you go. He did $2.4 billion of CapEx. So he's free cash flow, which is fine. He's investing in the business, but he needs to invest a lot more, not a lot less. So I think we're at a very pivotal point in Tesla. Robert Stevenson, Tesla isn't a car company. It is all about Mars and it's all about robots. But if you run out of money before you get there, it's going to be a lot about the balance sheet. And that's the problem, is that cars are actually what pay for everything else. And when cars stop making money and he burns through all of his cash, I don't care about robots. I don't care about AI. All I care about is cash. Cash is king. When it ultimately, and the most speculative, big picture idea company that's ever been, if it runs out of money, it still goes bankrupt. And this is going to begin to sneak into the narrative here if he doesn't address it. And I think he's smart enough that he does. But watch for that move. I think you're going to see him in the second half buy XAI. And then, let's see him do a $100 billion secondary, biggest secondary ever. And then he's done. And stock will go, by the way, Tesla stock will go to 1,000 on that move.
Wow. With the offering and everything, you think the market...
With the offering of it, exactly because of the offering.
Yeah.
I don't know what happens that day, but Tesla will be the biggest company in the world as soon as 2026 if he does what I'm saying he should do. That's also because NVIDIA is going to lose a quarter of its value. But even if it didn't, it would still be bigger than NVIDIA.
I like how it's 11:58 and you snuck in and I just as an aside, just put that in there.
I don't know. I get all these things in my head and then I forget about them. And I got to go pick up my kid from camp. They called in sick while we were on the call too. So I was just remembering that.
We'll leave it at that. I just pulled up the NVIDIA chart for fun. We'll leave it there for the call today. Go ahead and pick up your kid at camp, Enrique. That was some good stuff. That's very interesting Tesla idea. I wonder are you going to send it to Elon or do you think he's already ruminating on it?
Well, you know what we'll do? We'll publish it in Truth and Trends. Maybe I was going to publish it next Monday just because I had something else to publish on Thursday. And then maybe what I'll do is I'll thread it out on Twitter and see if I can get his attention. So yeah, I'm gonna have to make some like totally inappropriate meme though to really get his attention. It's got to be like sexually suggestive or exceptionally childish. Have the number 69 or 420 in it. So I'm gonna have to figure out how to Elonize my thesis to get him to pay attention.
That sounds like you got his correct wavelength.
Yeah, exactly. Yeah, I understand. We went to school together. We actually went to University of Pennsylvania at the same time.
There you go.
We hung in different circles, I suppose. So,
all right, good talking with you this week. I got my Enrique diary of stuff to bring up next time we talk as well. More good predictions, more good trades.
Good. Remind me. Hopefully this works out as well. Solana works out as well as ETHT did for folks.
I love it. I think it's a great idea.
Yeah. Thanks, everyone.
See ya.